Last time we tested a trading strategy which used MACD or the MACD indicator to signal into momentum trades. It would get us into long trades when the market started to push upwards. We would jump on the trend and stick with the trend until actually the opposite happened. The market then started to move downwards and we would get out of the long trade and we would enter into a short trade. This week, however, we're testing another indicator strategy, but we're going to do the opposite. We're going to be looking in buying into weakness and then selling into strength. And the tool of choice, or the indicator of choice, is the good old RSI set to a fast 2-period setting. The strategy idea is not mine, so I can't take credit for it. I actually picked it up, read it in a book more than 10 years ago. It was a book by Cesar Alvarez and Larry Connors. The original strategy was intended as a long-only strategy for the S&P 500. Buying short-term weakness on the S&P 500 is quite a good idea, especially as it has that overall long-term upward bias. However, we're going to be testing the strategy on 14 of the larger Forex pairs, and we're going to be trading long and short. The short entries are going to be the opposite of the longs. It doesn't really make sense to only trade in one direction on Forex like it does on an index. We'll be testing the daily time frame like the original strategy, and then to increase the number of trades, we're also going to be testing the 720-minute or the 12-hour time frame, and also the 240 or 4-hour time frame. I know that some of you would like to see the test results on even shorter time frames like 60-minute, 30-minute, 15-minute maybe, but I haven't tested that because I know that we would struggle to get a large enough average trade value to overcome trading costs. So for now, we're going to have the 14 Forex pairs on 3 different time frames, and then we're going to be testing not only the individual pairs but the pairs as a portfolio collectively for each time frame. So that's a total of 45 tests in all. Plus at the end I'm going to do a little bonus test for you, so stick around for that. Let me first show you how this strategy works. I'll show you a couple of examples on the chart in a moment, but let's just quickly run through the rules. First of all, we're looking at the long trade entries. We want to see some sort of a longer term uptrend, so we want the close to be above the 200 period moving average. I'm using a simple moving average, but in all honesty, simple or exponential is not going to make too much difference to the results. Then we want to look at the RSI indicator. Now we want to set the RSI to a period of 2. Standard is normally 14. We want to speed the indicator up. Looking at the RSI, we want to see crosses under 10. So we want to see that it was above 10 and then has moved down and crossed and closed under 10. When we see that, we buy on the next open. So dead easy and really quite easy to spot on the charts too. Next is the short trade entries, which are just the opposite. We want to see the close below the 200 period moving average. We want to see an overall downtrend. We want to see the RSI cross over 90 this time. And then when we see that, we sell short on the next bar's open. The long trade exit, we want to see RSI crossing over 90, and when we see that, we sell the next bar on the open, and the stop loss is set at the 200 simple moving average, and we'll see that on the chart in a moment. Short exit, just the opposite, RSI crossing under 10, and the stop loss again is the 200 simple moving average. So looking on the chart here, we've got the RSI indicator, and I've set these horizontal lines or these levels at 90 and 10 because they're the significant entries and exits. This cyan line here, which you can just about see, is the 200 period moving average. So at the moment the prices are above the average, so we're only looking for long trades. And we find a long trade as soon as the RSI dips below this line, which is the level of 10. The minute it dips below, we buy the open, the next bar, and we exit that trade when it rallies above the 90 level. Okay, so you can see buy and then exit. A few bars later, we're back in on a long trade because the RSI has then dropped again below the 10 level. And then we're out when it rallies above 90 and so on. Let's just move along and see maybe some short trades. This trade here, that you can see that we bought because the RSI dropped below 10, and then we didn't get an exit because the RSI didn't go above 90, but we got stopped out on the line of the 200 period moving average. And then as soon as the prices go below the average, we can only look for short trades. And we've got a couple of short trades here. So RSI went above 90, we shorted on the open of the next bar, and then we exited or covered on that short when the RSI dropped below 10. Another entry, another exit. This one happened to be a losing trade. So really easy to spot on the charts, and no matter which of the time frames, they're all going to look the same on the charts. You've seen how the trades appear and how they look on the charts. We were using MultiCharts. To do the rest of the testing, we're going to be using MultiCharts' Portfolio Trader, and we've got test data beginning in 2008 through to April 2023, and that data is Forex data from Oanda. All the results which you're going to see are going to be in pips rather than the currency value. So let's go and have a look at our first test, which is using the 240-minute or the 4-hour time frame. Okay, this is MultiCharts Portfolio Trader, and you can see the 14 larger Forex pairs here, all on the 240-minute or 4-hour time frame. Got our signal or our strategy here, which is the RSI, and we got data from 2008 through to the end of April 2023. Let's have a look at the performance report then. So net profit, we're looking at a loss of 7,200 pips across the portfolio, that is. Looking at the equity curve across the portfolio, or those 14 pairs, there have been periods where it has worked well, periods where it hasn't worked well. Overall, not very good. But let's look at the individual markets. We can see the individual markets here and the results for each of those. So Australian dollar, US dollar is making money, it's profitable. That's what the equity curve looks like. There's been, again, some good periods and bad periods. Looking at the size of the average trade, we've only got an average trade of 3.6 pips, and that's pretty low for the time we've taken out some costs for trading. Canadian Japanese yen is losing money. Euro pound is barely making money. Euro yen is losing money. Euro New Zealand is making money, not a lot. Tiny average trade of 0.8 pips, that's no good, and a bad equity curve. Euro dollar is losing money. Pound Canadian dollar is making money. The equity curve is questionable, not great, is it? What's the average trade like? Again, it's pretty small, only 3.7 pips. Pound yen is a big loser. Let's just have a look at that. That's the equity curve, obviously bad. Interestingly, remember that pound yen on some of the strategies we've tested before has worked very well in buying into momentum, into trending strategies. Now we're doing the opposite, of course. Pound US dollar is losing. New Zealand Canadian is making a little bit of money. Equity curve is probably maybe one of the best we've seen yet. Still not great, with still a small average trade of only 1.5 pips. New Zealand US dollar making a little bit of money. Again, 1.5 pips for the average trade. Certainly not big enough to make money after costs. US dollar Canadian losing money, US dollar Swiss franc losing money, and dollar yen barely making money. We haven't seen anything that good on the 4-hour time frame yet. A couple showed positive results, but the average trade was just too small. Using that RSI as an exit as well as an entry, we're just not staying in trades very long, especially on the lower time frames, and that doesn't give us enough time to stay in the market to capture a large enough move to get a large average trade value. Next though, we're going to be looking at the 720-minute or the 12-hour time frame. And using the 12-hour, we're going to be seeing some much larger, more usable average trade values. Now, for those of you who haven't been following along here on the channel, we're building a Forex strategy database together here on YouTube. Each time I'm testing a different strategy on 14 of the Forex pairs, and then I'm recording the results in a database available for everybody to access for free. You can find the strategies, the settings, and the corresponding video all in the database. And in the database, you can sort by any metrics to see what works best on what markets and what doesn't work on which markets too. I'll leave the link for the strategy database in the description down below so that you can immediately access that after you've watched this video. So let's first go and have a look at the test results on the 12-hour or the 720-minute chart. Okay, we've switched the time frame now to 720 minutes or 12-hour. Let's have a look at the results for this. Net profit across the whole portfolio is losing. And it's a pretty terrible equity curve. But let's look at the individual markets. Australian dollar, US dollar is profitable with a pretty bad equity curve. Canadian, Japanese yen is very negative with a very negative equity curve. Euro pound is negative. Euro yen is making a little bit of money. Equity curve not very good. Euro New Zealand is negative. Euro dollar is pretty good. Equity curve is moving up, but with some big drawdowns along the way. What's the average trade like? Got an average trade of 13 pips, so by the time we've taken trading costs out, we will still be making money with that average trade value. But not an equity curve I expect you would want to trade. Pound Canadian losing money, pound yen losing a lot of money, and a terrible equity curve to show. Pound dollar is the best yet actually on this time frame. And equity curve is moving in the right direction. A lot of the money made early on in the test. What's the average trade like on this? Yeah, it's a lot bigger, 23 pips, so not a bad average trade, but equity curve is not great. New Zealand dollar, Canadian dollar is making a little bit of money. New Zealand US losing money. US Canadian is losing money. US dollar Swiss franc losing money, and US dollar Japanese yen is making money with not a bad equity curve, probably one of the best we've seen yet actually. I mean, especially in recent times. Is the average trade large enough though? At 14 pips, yes it is. By the time we've taken a few pips of costs out, we're still going to have a decent average trade, so that's good. So US dollar Japanese yen with that equity curve, probably one of the best markets on the 720-minute time frame. 3 of the individual pairs on that time frame do have an average trade large enough to make money after trading costs. Next, we're going to have a look at our final test, which is using the daily time frame. And as a bonus, I'm going to test an additional exit on the daily time frame. This exit speeds up trades, it gets us out of trades quicker, and on some pairs it even gives us a win rate of up to 80%. Just before we look at that though, I want to give you the chance to grab 3 more profitable rule-based strategies. I've put them together in my 22-page Beat the Markets strategy guidebook. I'll show you what the strategies are, how to trade them, and all the test results. At the moment, I'm offering that for free, so if you find the link down below, you can get that right away. If you want more, even better strategies, then you should probably enroll in my trading course. In the course, I'll give you 6 more strategies, which do have very good backtest results also. I'll show you all the rules, how to trade them, and the best way to size your positions per strategy. I even give you access to download the code if you're using MultiCharts or TradeStation. The links for the course are also down below. Okay, let's go and have a look at our final test results on the daily charts. Okay, the final test then, daily time frame or 1440 minute. This is the portfolio. It's a massive loser with an equity curve which is pretty terrible. Looking at the individual markets, Australian dollar, US dollar barely makes any money with a pretty awful equity curve. Canadian, Japanese yen is a loser. Euro pound makes a bit of money with not particularly great equity curve. Average trade of 10. Euro yen is a loser. Euro New Zealand is a loser. Euro dollar is a loser. Pound Canadian is a loser. Pound yen on the daily this time is making money. Average trade of 19 pips, that's not bad. But the equity curve is not very good, is it? Pound dollar is the best so far on the daily chart. with an equity curve looking at the last 2/3 is not too bad, but in those early years certainly wasn't very good. New Zealand Canadian dollar is a loser, New Zealand US dollar is a loser, US dollar Canadian is barely a winner, US dollar Swiss franc is a loser, and US dollar Japanese yen is making a little bit of money. So none of those particularly good. I did mention a bonus test, and I'm going to show you that now. What I've done is I've swapped the exit and I've introduced a bailout exit, and I've included a day delay. Now, how that works is, what we want to see is we need to be in the trade for at least 2 days, and then at the end of the second day we check to see if we're in profit. If the trade's in profit, we bail out and we take the profit. If we're not in profit, we leave the trade open, and then we check at the end of the next day. If we're in profit, we take it. If we're not, we leave it open, and so on. So let's introduce that exit and see how the results change. I've programmed it so I can quickly change that. Setting the input to 1 will use the bailout exit. Here's the portfolio of markets. Let's just have a look collectively as a portfolio. This time's making 7,400 pips with an equity curve, which is not very good. Going back to the individual markets, Australian dollar, US dollar is making 2,700. That's pretty good. And that's not a bad equity curve, is it? Not bad at all. Something which we could possibly consider trading, as long as the average trade value is large enough, of course. With an average trade of 17 pips, it definitely is large enough. So this market with this strategy definitely has some potential. Canadian, Japanese yen making a little bit, euro pound making a little bit, euro yen making 1,400 with a better equity curve than before, not as good as Australian US dollar. Euro New Zealand making a little bit, euro dollar losing, pound Canadian losing, pound yen making 2,500 pips, not particularly good equity curve. Pound dollar making a bit of money, horrible equity curve. New Zealand Canadian losing, New Zealand US losing, US dollar Canadian making some money, a lot of that money made in the early years. US dollar Swiss franc losing, and US dollar Japanese yen making money with not such a great equity curve. So the standout pair here is obviously Australian dollar, US dollar, with not a bad equity curve at all. When entering counter-trend trades, meaning buying dips and shorting rallies, using that bailout exit can work pretty well. We've seen how using the bailout exit really transformed the results in a positive way when we were trading Australian dollar, US dollar. But overall, this RSI strategy is pretty mediocre across the Forex markets, isn't it? It doesn't seem to work quite as well as it does on the index like the S&P 500. But we have seen a few timeframes and a few markets which have started to show positive results, and with a little bit more work could be quite a usable strategy. Notice how some Forex pairs worked better than others, and this time the pairs which worked better with the RSI or the counter trend strategy weren't the ones which worked pretty well last time with the MACD momentum strategy. And that's because, as I say all the time, some Forex pairs are more suitable for buying trends or buying breakouts into trends, buying momentum, and some Forex pairs are more mean reverting, meaning we're better off buying when we get a dip, like we've used in the strategy today. You're going to be very hard pushed to find one strategy which works equally as well across all the Forex pairs. If you have found that, I'd love to know what it is, because in all the years of testing, I've never found one yet. Next, I'll go ahead and I'll update the free Forex strategy database so that you can have access to all the results which we've seen today. I hope you've enjoyed this RSI video. If you have, then please give me a thumbs up. I expect I'll see you on the next strategy testing video. But until then, this is Jared Goodwin, and thank you.